I'm Charlotte McLeod with the Investing News Network, and here today with me is John McCluskey, CEO at Alamos Gold. Thanks so much for joining me today.
Good morning.
We're here right now on the final day of the Denver Gold Forum. What's been your sense these last few days of how people feel about the gold market?
Certainly comparing this crowd to previous years, the numbers seem lighter. We did notice, though, that there was a lot of interest in our story, so it's been back-to-back meetings from the start of the conference. The sentiment towards gold is still muted, and we think it's going to remain that way as long as the U.S. dollar is strong and U.S. equities continue to perform as they have been over the last few years.
Are you happy with gold's performance so far this year? Do you see it improving before we hit the end of the year?
Well, given how strong the U.S. economy's been, how strong the U.S. dollar is, how well U.S. equities have been doing in particular, it's remarkable that gold has held in as well as it has. It's been well supported at the $1,200 level. I'm more than happy with that, given that we're still able to operate at a profit and our operations are continuing to generate sufficient free cash flow for us to essentially carry out our growth and maintain a strong balance sheet. So $1,200 gold is a price that we can work with and we can prosper with. I don't think we're going to see a change in the gold price anytime soon. I don't think that's going to come until you start to see some weakness in the U.S. dollar.
As you mentioned, even with gold trending downward this year, you've continued to make progress, particularly at the Island Mine. Can you fill me in on the latest activity there and what it means for the company?
You know, the company's approach has been to pursue acquisitions in a weak market. And one project we liked and we followed for a number of years was Island Gold. A discovery at the deeper levels there demonstrated the ore body was thicker and the grades were better. And that discovery had been unfolding over about a 3 or 4 year period by the time we entered into an agreement with Richmont Mines. We've been drilling very aggressively since we acquired the mine. We're doing just over 3,000, probably, was it 3, 6, 9, 12? Yeah, about 3,000 meters a month. We've drilled about 65,000 meters in the first half of the year. And we've added about 700,000 ounces of gold in all categories over that period of time. So the rate of exploration has been at quite a rapid pace, and the extent of the mineralization we've added has been beyond our expectations. So we've been very happy with it. We've also upgraded the mill, and we've increased throughput at the mine from 900 to 1,100 tons a day. That's another important milestone for us. We'll be operating the mine at 1,100 tons a day for the balance of the year, and we're looking forward to increasing production in 2019 from current levels to about 140,000 ounces a year. So the project has been advancing quite rapidly since we acquired it.
Are there any other milestones or catalysts coming up that investors should be aware of?
We continue to construct our Kirazli mine in Turkey, so things are going relatively well there. We're in the process of obtaining permits for the Cerro Pelon deposit down in our Mulatos district, and on receipt of that, we'll be starting construction on the Cerro Pelon project. There's quite a number of things going on throughout the company, but our main focus right now is completing the construction of the lower mine development at Young-Davidson. We've made a very heavy investment in that, and we're only 5 quarters away now from completing the project. At that point, we'll be able to up throughput at the mine from roughly 6,500 tons a day to 7,000 tons a day, where we are now, to 8,000 tons a day. We're designing that infrastructure to operate at 8,000 tons a day. And that's going to mean a very sort of substantial jump in free cash flow in 2020 at Young-Davidson. And that's something that I think shareholders in the company are really looking forward to.
As of the end of Q2, you were on track to meet production this year. You'd paid a dividend. Overall, are you happy with your financial and production performance this year?
We're actually ahead of where we expected, and in particular, due to the fact that both Island Gold and Mulatos have been outperforming. At Island Gold, we budgeted to break even at Island Gold, given our cost assumptions and development assumptions. In fact, we're ahead of the game. We made $14 million in free cash flow in the first half of the year, and we'll probably do something similar in the second half of the year. And that's just because the mine's been performing better. We've been seeing positive grade reconciliation. Throughput at the mine's been going very, very well. So we actually produced 15% more gold in the first half than we had originally budgeted. And so while Island and Mulatos do sort of above forecasted production, we can't. We certainly can't complain. Costs have been down at both projects below budgeted levels. So we're generating a lot more free cash flow than we anticipated. We have a very strong balance sheet, very conservative balance sheet. Everything that we're doing in terms of our growth is fully funded by either the free cash flow developed from the projects or the balance sheet itself. We have no necessity to borrow money or issue equity in order to realize on our growth plans. So I'm more than satisfied with where we are, and I think we're only going to get better from here.
As a final question, one thing I've heard repeatedly this year is that gold miners are not investing enough in exploration. They're not replacing their reserves. Your company continues to explore. You acquired Richmont last year. Do you agree that this sort of activity is something that we need to see more of in the gold space?
Very clearly, we do need to see it. It's often the case that when gold prices are lower, in order to conserve cash, mining companies will cut back on exploration. We've taken quite the opposite approach. We've been exploring very aggressively over the last few years, and we made a new discovery called Leaki Grande down at our Mulatos project. We ended up finding roughly 600,000 ounces of gold there. We've been very aggressively drilling at the Island Gold project this year. We have about an $18 million budget just focused on expanding reserves and resources, and that's been going very, very well. We recognize that the reality of the business is that exploration suffers when margins are thin and companies are struggling. But if we don't do something as an industry, we're going to find that over the next decade, we're going to deplete our resources much more rapidly than we can replace them, and eventually we're going to face a crunch. So we've been very well aware of that as a company, and it's one of the reasons why we aggressively pursued M&A over the last 5 years. We've essentially taken our reserves from under 2 million ounces to over 10 million ounces in the last 5 years. That was motivated by the fact that we could see that there would be fewer and fewer projects to acquire in the future, and it is not getting any easier to find gold. You often hear said that most of the low-hanging fruit has been picked, and it's getting more and more difficult to find new things, and that is proving to be the case. So we simply need to do more exploration work. The industry needs to spend more money, and we need to invest more in technology, and we need to find new ways of finding gold.
Thank you so much. That's everything from me. Once again, I'm Charlotte McLeod with the Investing News Network, and this is John McCluskey with Alamos Gold.